Hello, everyone, and welcome to another live stream. My name is Adley Telford. I am the creator of the course, Simple Stock Trading Simple Beginner Guide, now available on Udemy. I am also the author of the book, Better Thinking Habits, the Introduction Edition, which is now available on Amazon in paperback and ebook. Both links to my Udemy course, as well as the link to my book on Amazon, is going to be available in the link below in the description. These live videos are part of a package deal that my students get when they sign up to my course on Udemy. They get access to these live streams where we pick stocks on a daily basis to trade for the following day, as well as we review previous day stock trades. As of right now, these live streams are scheduled Monday through Thursday at 7:30 p.m. Eastern Standard Time, which is New York time. Today is June 25th, 2025. And as usual, we are going to go ahead and get started by doing the same old, well, I won't say the same old, but we'll get started by doing the same routine that we've always done, which is the first thing we do is we come over here to investing.com and we are going to be looking at our economic calendar. For those of you who have not watched any of my previous videos or have not taken my course on Udemy, we are getting, I want you guys to get used to, especially for the students that taken my class, I want them to get used to, well, I want you guys to get used to being in a routine of always checking your economic calendar, because here we are going to find the information in regards to any major reports that the US government is going to be releasing. And in my course, we talk about how you can filter this by different countries. If you're in, you know, Asia, India, anywhere around the world, Europe, then there are ways that, let's go ahead and exit this. Right, so I guess they may be doing an update. Wow, this is what happens when you're doing things live. And Windows. All right, so these are different things these are all the reports that are coming out by the US government. So these are the reports that were released today. But what we're looking for when we go on our economic calendar is today we're going to be picking stocks that we want to trade for tomorrow. So when we come to the economic calendar, we're just going to click here. We're going to click on tomorrow to see any major news that's going to be coming out. And once again, we're going to be looking for 3 stars and clusters of 2 stars together. So here we have our 3 stars. We have durable good orders, this is really something that's going to affect the retail stocks. So anything that's dealing with like Walmart, Target, anything retail wise, this is going to affect those stocks. And then over here we have GDP, the dollar value. Here we have initial jobless claims that's coming out at 8:30. So we have like 3 major things that are coming out, but that's all coming out before the market opens up at 8:30. So once again, when the market opens up to when the general market opens up at 9:30, then we'll be able to start trading. But I would say with this information coming out, initial jobless claims, that affects the entire stock market, uh, because if the initial jobless claims, meaning a lot of people are filing for unemployment and things like that, that's the sign that the economy is weak. So that can affect the entire stock market and all sectors of the stock market. And then we have here, which is your durable goods. Like I said, it affects primarily the retail market. So with this happening here at 8:30, we know that there's the pre-market where typically you can start trading stocks at about 7 o'clock in the morning. And this is really for professional traders, institutional traders, and major institutions that trade early. This information is coming out at 8:30. General market opens up at 9:30. So I would say about 10:30, I would jump into my first trade based off that information. Because this information over here, we have what they call a forecast, and then we have the actual, and then we have the previous. So here, even though they have a forecast, even if it beats it, you know, or if it's, let's say there's more jobless claims than they forecast, it's a bad sign that the market may, that the economy could be in a tough place. So the market may react to that. If there's less jobless claims, the market still may interpret that as something bad, and the market may go down because they're interpreting it as, well, we expected it to be a lot lower. It's a lot higher than, it's close to what the forecast is. All right. So now that we're done with this piece of it, the next thing that we need to do is we want to go ahead and we want to go ahead and say, well, we want to go ahead and go to our stock screener on FinViz. Here on FinViz, we're going to do what we normally do. We're going to go over here to the screener. And once we get to our screener, we're going to go ahead, and we're doing this from the point of view of a beginner trader, somebody who's starting off with $300 to $500 in their account. So we're not going to be looking at these high ticket, high price stocks, right? So we want to look at stocks between the price of $10 and $50. Next, and as you can see, we went from about 10,000. We went from about 10,000 stocks to 5,000 stocks. Next, we're going to go to average volume. We're going to go and we're going to keep this now at over 1 million. So we can have a lot more options, right? As far as stock picks. And then finally, we're going to go to technical. And under technical, we're going to go to ATRs, an average of about $2 or more. So we want to get stocks that are moving up or down at least $2 or more. And that brings us down to a total of 64 stocks that we're looking at, right? Now, once again, we want to stay away from ETFs and we want to stay away from the healthcare stocks. I'm going to try to go through these 64 stocks as quickly as possible. Similar to what I did yesterday, as far as showing you guys how we can filter through these stocks as fast as possible. So the best way to do that is first go over here to technical, and we want to go ahead and filter that by ATR. And like I've said in the previous videos, and I can't stress this enough, we're always going to filter it by ATR because what we're trying to do is we're trying to buy the stocks that have the most movement. We already know that each one of these stocks, based off the parameters that we filled up over here, we know that all these stocks are between the price of $10 and $50. We know that the average volume is 1 million shares of stock or more, meaning on average, these stocks are selling. The stocks listed here on our screener, they sold at least 1 million or more stocks on a daily basis on average for at least for the past 30 days, right? And then we're going to be looking at our ATR, meaning these stocks moving a minimum of $2 or more up or down. So when we filter it by ATR, the highest one that we have here is our RGC, right? And then from there, this one moves up or down on average for the last 14 days, $11.45. And then it starts to trickle down from there. Now, if we're starting off an account with anywhere between $300 to $500, we may only be able to buy 1 to 2 stocks. So which one would you rather buy? Would you rather buy a stock that's moving up or down on average $2 a day? Or would you rather buy something that's moving anywhere between $14 to $11 a day? So our goal by filtering it by ATR and looking at the highest ATRs first, which are the ones that are probably going to give us the highest possible return on our investment, is to say, well, if I only can buy 1 or 2 stocks with my $300 to $500 as a beginner trader, I want to buy the stocks that's going to give me the biggest bang for my buck. So I'm going to start from the highest possible ATR and work my way down to the lowest, right? So the first one we're going to be looking at is going to be RGC, right? And like I said, typically, like me right here on my screen, I have like all on my work setup, I have 2 huge monitors. I have 2 34-inch monitors, curved monitors. I have my laptop, but I'm going to be working at it from a perspective of somebody with a single monitor, right? So now that we know what all this is, it's already filtered. So we can actually just now go back over to overview, and it's going to keep that exact same order that we have, but now we can see what's healthcare and what's not, right? So, for example, this one is a healthcare stock, and this was not even on our radars for the past 2 weeks. I've been doing these videos now for about 2 weeks, and this has never been on our radar. And the reason why it's popping up on our radar now is more than likely because they released some type of major information or major drug or something like that, and that's why it's popping up. And that's why I said I want to stay away from the healthcare stocks, especially with what happened today. Today, you know, what is it? The JFK Jr. He's in charge of the health. He's in charge of healthcare in the United States, and I don't remember his exact title, but they want to get more away from vaccines, and because they want to get away from vaccines and kids taking any kind of medicine, or even people just taking medicine, the healthcare sector right now is really kind of funny, because even if there's a new drug that comes out, uh, you know are they going to approve it? Are they going to say, well, we want everybody to be vaccination free? And right now he's looking at the vaccination that the kids are getting in order to get into public schools. So now they're reviewing that and saying they may just do away with that as a whole. So we may want to stay away from healthcare stocks for that, right? And I'm going to touch on this before we start filtering down through these. It's very important, and you're always going to hear me talk about the two type of uh, analytical two types of analytical research you can do. You can do analysis. You can do fundamental analysis, which is really just trading solely off of what's happening in the news, happening in the media, in speculation. And then you have technical analysis, which is kind of like what we're going to be doing once we go over to our charts, and also what we see in front of us. This is more of us looking at the numbers and saying, okay, this is what the numbers are. This is the technical aspect of this company, and this is the technical aspect of the charts. And you cannot just trade solely based off of what's happening with the charts, or the technical analysis part of it. You have to incorporate both the technical analysis part of it and the fundamental part of it, meaning you should be able to look at this information, look at the charts and say, wow, we're in an uptrend. But you also have to say, before I trade that stock, I have to be aware of what's happening in the market. I have to be aware of what's happening geopolitically, what's happening in the news, what's happening with that company. Because if you're not aware of that, and then you buy the stock, even though all these indicators show that the stock is going up, and you're not up to date on the news, you can actually lose a lot of money that way, right? So I'm going to trade like I only have one monitor. I'm a beginner trader. I don't have to set up of 2 or 3 screen monitors like I do. But so I'll just trade like we're going to be going back and forth between FinViz, which is our stock screener, and we're going to be going between that and our charts, which are going to be on Trading View. So the first stock that we're going to be looking at, like I said, we're going to avoid this one, which is the healthcare. We're going to go to SBET. SBET. We're going to go over here and we're going to type in SBET. And here we're going to go ahead and pull that up. Our charts already have all of our indicators. And this is one of the ones that we looked at yesterday. All right. And the reason why we're not going to really focus on trading this particular stock, as you can see, this stock right here, it's the first time it's really broken into this high area right here. And this happened, it broke into this high. Let's stretch this out a little bit. We can see here, it was the first time it broke. It was always under $10. So around 8.25 was normally your high, and your low is about $2. And for whatever reason, it broke up above that here on this date, which is March 27th, right? Last month on the 27th. And it's been up. It went up all the way up here to $124. So there was a big spike. Now, what was that because of? Was it because of a new law that changed, or something that happened that caused the stock to jump up? And now here we are today, the stock's already back down to the price point of about, what is it? $10.28, right? It closed at $10.28. So you see how if you buy certain stocks that have these big jumps, you know, you're like, oh, wow. See, technical analysis right here showed you, oh, the stock is going up. But I'm pretty sure if we did some research into this stock right here, we would see why it went up. And then we can say, okay, we can see that it was coming down. That's why you cannot solely trade based off of technical analysis. You have to be aware of what's going on in the news. So this stock is not going to be something that we're going to look at right now, solely because there's not enough information and we don't want to dive deep into it. And because of this, this big volatility right here, I'm just going to walk away from it. The second stock that we're going to look at is going to be Airo, AIRO, and let's click on that one. And we're looking at it on a daily time frame. Once again, this stock, we can just automatically eliminate it because why? There's not enough information or history. This stock recently was listed on the stock market on the 13th of this month, right? So we're going to filter through that one. Next one we got over here is VOYG. Okay, VOYG. Let's take a look at that stock, VOYG. And here, let's go ahead here and let's go to our live and go here. Okay. So here we don't have enough information on this particular stock as well. So we're just going to move on to the next one. And the next one we have is HIMS. This is an ETF. And like I said, you want to stay away from the ETFs. And for those of you who are watching, if you have any questions about any particular stocks that you want, just go ahead and put it in the chat and I'll be more than happy to pull that up. We're going to stay away from the ETFs because the ETFs are a little bit more complicated and I have to explain how that is. If you haven't taken my course that's on Udemy, then that's the beginner's course, but I plan on setting up another course in the next few months. And that course is going to be a little bit more advanced where I'll be talking about options and ETFs as well. And I'll be showing you how to trade those successfully. So the next one that we want to look at is going to be DFDV. 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 All right. Here we have this one. And let's take a look here. This particular stock here, are we okay? So this one, we're going to spend some time to look at it. Nope, we're not, because what's happening here is, once again, this is like the other stock that we look at. It just recently broke above this area, but for the lifetime of this stock, it's really been more or less a penny stock under $5, right? So it's really been in the $1.22 range. Something happened that caused the stock to kind of break through and go up. It is in an uptrend, but there's not enough history as far as it being in this range. So I'm just going to stay away from this stock over here. And we're going to just go over to the next one. And we're just filtering through these stocks. Remember, we started off originally with about 10,100 stocks. We filtered it and brought it down to about 64 stocks. And now that we're at those 64 stocks, we're not going to be trading any healthcare. We're not going to be trading any ETFs. So we're just going to see how fast we can go through these 64 stocks, which in total should probably only be about 40 stocks once we eliminate the healthcare stocks. Now we got HIMS. Oh, wow. HIMS has really come down. So now let's take a look at HIMS here. Okay. HIMS, the stock. HIMS. All right. HIMS. Let's see what's going on with HIMS. HIMS has had some really bad news that happened with them. They've lost some partnerships. And this is a stock at one point in time was like up here in the $70 price range. And you can see when their partners announced that they're going to be walking away from them on Monday, the stock dropped from about $62 all the way down over here to about $41. So HIMS, we know that there's a lot of information happening right now in the news with this particular stock. So there's a lot of uncertainty. This stock right here, and this is a great example of what I was talking about earlier. We have the green line on top showing that the stock is in an upward trend. We have the green line at the bottom, but that was also pointing up, showing that the stock was in an upward trend. And here you can see that the stock was in an upward trend. So all of our technical analysis here and all the information on our from our indicators on the chart shows that the stock was supposed to be going in an upward trend. But then when the news came out, which is what they call fundamental analysis, once the news came out that they were losing partners and there's some issues of possible lawsuits and other partners leaving, the stock dropped, even though all the indication shows that the stock was going up. So when you do buy a stock or you're considering buying a stock, you have to be aware of what's happening in the news, because things like this can happen where you're riding the wave and it's going up and everything is great, but then some bad news come out about that company and then it just drops. So you have to be aware of that. So you can never really buy stocks like some of these people sell these programs saying, oh no, if you follow this, if you follow, this particular setup, then you're always going to make money and everything's going to work out. But they don't take the fundamental analysis piece into it, which is, what's happening in the news or geopolitically. So HIMS, we're going to stay away from that. This one is an ETF, so we're going to stay away from number 8, which is an ETF. Now we're on number 9, CEP. Let's take a look here. CEP, is that going to be tradable? CEP. Click on that, and we're going to go from there. And here, CEP, once again, this is another stock. First time it's in that area. Nope, we're not even going to look at it. Right now it's an uptrend, but there's not enough information. That stock has really never really been in that area. The first time it's broken above really $11 was going to be in April 23rd. it broke through it, so there's not enough history of it being in this high of a price point. So this could be stock manipulation as well, or it could just simply be some great information or news came up about it. But there's a chance that this stock is going to come back down, because as quickly as it went up, it's coming right back down. So we're going to stay away from that one. There's enough history there, right? What we're looking for is we're looking for stocks that as soon as we pull up the chart, we can see entry points, buy points. There's a lot of information. There's a lot of history there. And so far, we're not seeing any of them right now, right? This one is number 10 is an ETF. So we're going to go over to number 11, INOD, INOD, INOD. And with this one, all right. So this is a good example. We have a stock here. We have a lot of good information. All right. And we're looking at it on a daily time frame. And what's happening here is we have a clear area of resistance on our daily time frame, which is right here, this red line. And then we have an area of support down here. We are in an uptrend. We have our green line, which is on top and is pointing up. We have our red lines at the bottom and it's starting to point up. We did break through that area of resistance right over here. It came back down, but it's still above that area of resistance, right? But now right here, it's still above that area of resistance. So let's see what's happening here on a 4-hour time frame. On a 4-hour time frame, this is an area of resistance, and this right here at 51 is an area of resistance right over here. So if we were to buy it at 46, once it hits right around here, about 51, we can see that, possibly being an area of resistance where it may bounce back down and come down, right? But we're also looking at it on both the 4-hour time frame as well as on the daily time frame. On our RSI, we can see that it's still right there above the 50 line on the RSI, which is right over here on the purple. So let's go back to our daily time frame and let's go ahead and identify. We said it was at 51, right? So on our 4-hour time frame, 51 is basically that area of resistance. So we're going to go ahead and draw that line here. So visually we can see it, right? Now visually we can see it right over here. All right. Now what happens is we can buy the stock here. We can buy it here at the 40, right? Okay, it closed at 46.39. Post market, it went down to 46.25. We can buy it here. If we bought the stock here, right, where would we set our stop loss? We can set our stop loss over here, but the chances are it can come back down here at 43. So we bought it at 46 and we did a stop loss at 43. That's not a real stop loss right there. So I can do one of two things, or you can do one of two things. One, you can buy that price here. We do show that it's in a clear indication that it's going up. It did break through this area of resistance, so it should not be coming back down below this area of resistance, because we can see that, right? It shouldn't be coming back down. But if we bought it here at 46, we have to worry about this area of resistance right over here at 51. So if you don't mind buying that stock tomorrow when it opens up, if the stock price is still around 46, $45, we can buy it with the expectation that it's going to come up to about $51. But when it comes up to like maybe $50 and $50.50, we can sell it because it more than likely was going to hit this and come back down again. Now the chances that it break through it, it's pretty good because it's an upward trend. So eventually it's going to break through this area of resistance. But but how long is that going to take, right? Here we can see that, and here we can see that the ATR on this stock is $4.05. So that means this stock right here on average moves up or down on a daily basis of about $4.05. So right here, if we're at 46.25, that's what it's closed post. At $4, if we put $4 to it, guess what? It comes up right up here to about $50, right? So we can expect it to get this high tomorrow, about $50, because it's going to move up at least $4.05. So what we got to hope is that during the pre-market tomorrow, it doesn't open up much higher than this. But I can buy that here and with the expectation that it's going to go up. The problem that I have buying it here and why I would not recommend a new trader buy it here is for the simple fact that you don't have a clear stop loss, right? Unless you put your stop loss all the way down here at 41. And that's meaning you're willing to put $6 of risk of each one of those stocks, right? Now, if you bought it here, you have to be willing to sell it here right before it hits this, because once it hits this area of resistance, it could come down. The chances are, I believe, with the uptrend right here, unless something major happens, it's going to break through it eventually. But how many days is it going to take? And like I said, you don't necessarily want to be stuck on these stocks over the weekend. And tomorrow's going to be Thursday. So if you bought this on Thursday, you want to sell it Friday morning or Thursday evening, right? Uh, you know, you can sell a certain amount of stocks. You can buy a stock and sell it the same day a certain amount of times. I believe like two times or three times before your broker flagged you for day trading. But if I was to buy this tomorrow morning, I would try to sell it right about here, and I will keep an eye on it if it was above here or if it closed above here on Friday, so that way Monday I can buy into it. Because with everything that's happening in this society, everything that's happening right now in the news, especially with this administration, any kind of news anything can happen over the weekend, and it caused the stock market to kind of drop again. So I would buy this tomorrow and try to get rid of it right about 50, and then wait till Monday and probably buy it again on Monday. If you buy and you decide to hold on to it, understand it will be a little bit risky because we have a lot of news that happens over the weekend. All right. So this is a stock that I would add to my watch list, right? And I would add it to my watch list, and let's go here. Let's go to my watch list, and we're going to add this one over to our watch list to buy it. All right, that's my phone going off here. I'm going to add INOD, and we're going to add that to our watch list. And hopefully it's still in that price range, $46 in the morning around 9 o'clock pre-market, if we were to buy this particular stock. All right. Now, remember, when we looked at our event calendar earlier, we had two things that would happen. We had initial job losses. I'm going to be trading tomorrow a little earlier, and the reason why I'm doing that is because the initial job loss reports is not expected to be that high, and the market is not really heavily truly going to affect the market. So I'm not too much really worried about that. And the other one was for retail, and this is not a retail stock. This is a technology service and data service. So I don't necessarily have to worry about it affecting this. This is more of a technology stock, right? So we're going to put that on our list to watch tomorrow and buy it. Now, remember, our expectation that is eventually it's going to break through this, because it's showing that it's the uptrend has started, and once it breaks through this, the idea is it's going to continue rising all the way up to about maybe $68, and it has been in that price range before. Okay, so this is one of the ones we're going to add in our watch list. I would most definitely, you can identify when you have a turnaround. If we have a crossover here, there's two ways. One, if we have a crossover where the red line then goes on top and is pointing down, and the green line's at the bottom of the red line and is pointing down, then we know we're going to be in a downtrend. Kind of like what we have here. We had the red lines on top, green lines at the bottom. Green line's pointing down, red line was somewhat pointing down, so we weren't in a true dead cross, but you can see the stock price was dropping. Here, when the green line's on top and it's pointing up, red line's at the bottom and it's pointing up, you can see we were in a clear uptrend, and then we had that crossover, and then we had that downtrend. And I show you how to set this up once you take the course on Udemy as well. But most definitely, right now we are in an up. We're in the beginning of an uptrend. And the second way that you can identify that, and this is going to be an early indicator, is your RSI right over here. With your RSI, I'm just going to increase the size of that. With your RSI, you can notice the numbers right over here, like the 63, 64. So you see this little dot right over here, this little dotted line. This is basically your 50, your middle range. Now, as long as this line stays above it, it's going to come, it's going to hit, it's going to go down, but it's always going to come above it, right? As long as it's like that, above that, and it may come down a little bit, we know that we're in an uptrend. When this happens here, where you can see that it's down below the 50 mark, and it comes down to like all the way to over here by the 30, it comes down, then it bounces back up, and it comes down. Now we're in a downtrend in this area, right? And here we're in an uptrend. And let me minimize this so you can kind of see. So here you can see when it was below the 50 line in this area, in this zone, you see we were in a clear downtrend. So this is normally like your early warning that we're in a downtrend. But as of right now, we can tell that we're in a clear uptrend. all right, because it's above it, the 50 line, and right here we have we're showing that we're in a clear uptrend. So this one we added to our watch list for tomorrow, right? And during the pre-market, it may go up a little bit, it may come down a little bit, and that's fine. But if you hold on to it, if you're going to hold on to this for a couple days, that's fine. You can do that, unless you see a turnaround. But try not to hold it over the weekend. I wouldn't recommend it to my trade. I would normally say buy it tomorrow, try to get out of it by Friday, keep an eye on it on Monday, because we don't know what's going to happen in the news, in the sector, in the news geopolitically or anything like that. And if it closes above this area of resistance right here, which is like 51, once it closes above that area of resistance, then I would buy it again with the expectation of it rising all the way up. So we have one item that we just added to our watch list. And what I'm going to do is I'm going to put a yellow label next to it saying that keep an eye on this for tomorrow when the market opens. Next one that we're going to look at is going to be SMR. SMR, I think I already have that on my watch list. Yes, SMR, I already have it on my watch list here. And the reason I have this one on my watch list is because this is something that I've been wanting to buy. I said I keep an eye on it. You see, I have my yellow tab next to it, and we talked about this in some of the previous videos. I was just waiting for it to get to a certain point, right? So we've identified this line right here on our daily time frame as that area of resistance, right? So we know that it broke through this area of resistance. It came down, it touched it, and it bounced back up. Now, if we go on a daily time frame, we can't see that clear area of resistance, which is one of these red lines that the system actually put in place. For those of you who have not taken a course or don't know what the area of resistance is, these are indicators. But if you go on our 4-hour time frame, you'll see here we have a clear area of resistance, and that's why I drew this black line here that you can see, just to kind of so I can identify that area of resistance when I look at it on my daily time frame, right? So on my 4-hour time frame, I can see here with this particular indicator, we're in a clear uptrend, right? Green lines on top pointing up, red lines at the bottom is pointing up. It broke through an area of resistance, and here we can look on our RSI, it's above the 50, right? Now, I could have bought this earlier, but the reason why I did not buy this particular stock, and I set, you see this little yellow line here with the number 3767? This is my alert, right? I wanted to buy it when it gets as close as possible to this area of resistance here. So this way I can set my stop loss right below it. You see, if I buy it right now at this price, which is $38.62, right? And I say, let's say as a beginner trader, I have a $500 account and I was to buy that, I can get how many of these for 32? Okay, let's pull this up real quick and let's do the math. We can do, and I prefer, okay, so we have $500. 500 divided by, and that's going to be what? 38.66. 38.66. That means we can buy 12 stocks, right? So we can buy 12 stocks with $500. But if I bought it right here at $38, I have to set my stop loss because it can come in as low right below this area, which is $36. So that means I've got to be willing to lose roughly about $3 for each stock, right? So if you take 3 and you multiply that by 12, that's $36. So now it's not so bad. But when we originally set it up, it was right up about over here at 42. So I can afford to lose $36. I'll say, okay, look, I'm willing to lose about $36. I will, well, not lose, but I'm willing to put $36 at risk. I'll buy the stock now because I know it's probably going to come as low as this area and then it's going to bounce back up again. So I'm willing to put about $36 at risk. I'll spend $500, buy the 12 stocks. And my expectation is that it's going to continue going up because we are in a clear uptrend. All right, there we go. Because we're in a clear uptrend. So I would buy this stock here at this price. So this is a stock we're going to probably go buy first thing tomorrow morning. So we have 2 stocks that we're looking at for tomorrow. And this stock right over here moves up or down an average of $2.71. So, you know, we're doing pretty good. Now, the next stock we buy is the next stock, not that we buy, the next stock that we look at now we add to our watch list would be a stock that's probably going to be a lower ATR, meaning it's going to probably be less than $2.72. But let's go ahead and see here. So far, we've got two stocks. Next one is number 13 is an ETF. We don't care to do that one. Next one is an oil stock, which is a little okay. Let's look at that one. HUSA. That one never showed up before. This is the first time it's showing up. HUSA. All right, so let's take a look at that one. We're taking a look at that one on our daily time frame. Has this stock? Okay, this stock has been in that price range before. This is actually a stock that I've looked at before. All right. Now, this stock right off the back, I can look at it and I can say, I'm not even going to bother touching this stock. I'm not going to look at trading it. The reason for that is because when you look at this stock, this blue line right here, I've looked at the stock before apparently, is something that I drew in. So let's just go ahead and delete that line. And the reason why I'm going to tell you I'm not even going to bother looking at it is because here we can see that this stock had, steady movement. It's steady movement all the way back in March and April. And then during the beginning of the conflict with the Iran and Israel thing, because this is an oil stock, an energy stock, you can see how the stock basically it jumped. It had this big gap right here, right? And it went all the way up as high from it basically jumped from $5.36 and it went as high as $25, and now it's tanking and it's back down to $12, right? So if the conflict in Israel between Israel and Iran was still happening, the stock would have probably continued rising. But now that they have ceasefires in place and everything else like that, these oil prices and these oil stocks are going to probably start leveling off a little bit. So I wouldn't even bother trading this stock when you look at it. All right. Now, for those of you, once again, who have not taken my course or are new to trading, and you don't understand like what these lines are and the support and the resistance and RSI and ATR, these are things that I cover in my course, and I show you how to set up your chart just like this, so you'll be able to easily identify these things and understand what they are. If you're new to trade, if you're not new to trading, and you understand all this stuff, then it sounds very familiar. All right, and I'm just so the next one is going to be. Let's take a look here. We have CHYM. CHYM. Let's take a look here. I think I have that one as CHYM. I think I looked at that one earlier, maybe last week or something. Yeah, we looked at that one. I don't think, was it on my list? Nope, it's not on my list. Nope, it's not on my watch list. All right, so this one, once again, wouldn't even bother trading that. The reason for that, there's not enough history happening here. There's not enough history with this particular stock. This stock is just, you know, it's new. It's new to the market. It just came out June 13th. So we're not going to bother looking at that one. Next one is going to be healthcare stock. We're not going to look at that, number 16, healthcare, and number 17, NBIS. NBIS, I believe I already have that on my watch list from earlier. NBIS. No, I don't. Okay. This is a stock I've traded before. NBIS. All right. So let's see what's happening with that one. You haven't showed up on my list in a while. Oh, okay, good. Oh, this one has a pretty good ATR. This ATR for this one on the daily time frame is going to be $3.72. Right, good. And here we have a clear area of resistance right over here. Let's take a look. Let's extend that so you guys can see it visually. I'm going to extend that line. So right there, we have a clear area of resistance right over here. It closed below it at $48.52. And this stock is a technology service stocks, internet software stock. All right. Now, this stock over here, and like I said before in previous courses, no stock ever really just goes straight up like this. No stock does that, right? So when you see things like this, where the stock is kind of going up and it's coming down and it's going up and it's coming down, that's pretty normal, right? So I don't want you guys to kind of look at this and say, well, it broke through that area of resistance right up here and then it came back down. An area of resistance is exactly what it is. It's an area, it's a zone. So even though this one line is here and saying like this is like the area of resistance, it's an area. So it's typically kind of like this. An area of resistance would be something like this right over here, where basically, you know, it would it would come into this zone over here, and it is, if it closed above that zone or that area, then the stock is basically ready to buy. It typically hits that zone or that area, and then it hits it and it can come back down and test it again, right? So let's go ahead and delete that. So what reason why I would still consider buying it, the reason why I'm going to put this on my watch list and I would consider buying it. One, it's a technology stock right now with internet and everything else like that. And what's happening right now? Facebook is building out this in Louisiana, I believe. They're building a $10 billion database center, right? Right here, we can see we're in a clear uptrend. Green lines on top pointing up, red lines at the bottom, it's pointing up. We are in a clear uptrend, and this right here is kind of like a pullback. It went up and it came back down. So if I was to buy this stock right here, I would probably say I wouldn't necessarily buy it here because this is an area of resistance. Uh, but I would buy it once it closes above this area. So I would probably set my buy at about 57, I'm sorry, 53. And the reason why I said I would buy it right above here, and I'm saying as a beginner trader, as a brand new trader, somebody who's not used to trading at all, I would recommend that they buy it at a higher price over here. I would not recommend that you buy it here because if you buy it here, where are you going to set your stop loss? If you buy it here at $48.50, then you may want to set your stop loss right below this one over here at $45. So if I bought it here at 48, I'm going to set my stop loss right below this point right here at 45. It's not but it's not as clear. It's somebody who's a little bit more experienced can look at that and say that, but somebody who's brand new to trading, they would not be able to identify that area for the stop loss. So I would recommend that you buy it once it passes through and breaks through this um, area of resistance. It's kind of like y- you know I'm trying to make sure whenever I do these videos, I stick to like the mindset of a beginner, not somebody who's like a a well-seasoned trader. So if you bought this stock today at this particular price or tomorrow at this price, you would actually have to hold on to it for another week or a couple days and over the weekend in order for it to kind of, before it actually really breaks through. It is in an uptrend, so more than likely it's going to continue going up. But this is a stock that I'm going to add to my list because, it's something that I would trade for myself, but I wouldn't recommend to a brand new beginner trader because you may have to hold on to it a little bit longer. You know that eventually it may break through and it's going to go in an uptrend. But but if you buy it now, you may end up having to hold on to it a little longer than you really expected to. All right. Let's take a look. What else do we have here? Let's go look and see another stock. Another stock that I would look at would be, okay, NNB. All right. Let's see. No, we are at which one? Yeah, NNE. NNE is a stock that I'm actually in a trade for right now. So this particular stock is here, NNE. That's why you have the green because I'm already in that trade. All right. So I bought this stock and currently in the trade for the stock. I bought it at about I think it was like 708 or something like that. I bought it like right around here in this area, about 708, 725. I roughly bought it. And I bought this stock about 2 days ago. And I bought it on this candlestick over here. I bought this on Tuesday. I'm sorry, today is Wednesday. I bought it on Tuesday. I bought on Tuesday. The stock had come back down and it dropped. It went close below it. Right now, I'm pretty confident that the stock is going to rise back because it's in an uptrend. It's going to rise and close above it. But if it drops any lower, maybe if it drops below, this area of resistance over here at about 32, I'm going to cash out and because I'm going to expect a turnaround where it's going to probably start being, going in a downtrend. But for right now, I'm going to hold on to that stock right until it gets below $33.08. So I'm holding on to this particular one right over here. My expectation that it's going to break through and rise up to about 47. Next one is going to be, this one is an ETF. We're not even going to bother trading that. And then number 20 is a healthcare stock. I'm not even going to bother trading. Like I said, we're going to stay away from our healthcare stocks. So out of 64 stocks that we filtered it down to, we just ran through 20 of them, and it's only been about 45 minutes, and that's with me explaining and talking, right? So the next one we're going to go to is page number 2. We're going to see here what we got on this page. We have ASTS. Let's take a look here. ASTS. I believe I already have this one now. Nope, I don't have this one on my watch list. Let's pull that up. I'm sorry, ASTS. And let's see here. We have this particular stock here. All right. So that's why I don't have it on my watch list. This stock right now is clearing an uptrend. It's passed through that area of resistance, which is right here. So we missed this opportunity when it broke through this area of resistance right here. And as you can see, this is typically what we're looking for. And this is typically what happens. It broke through that area of resistance right here, and it just basically went up, and it didn't come back down and test that area of resistance. So this would have been a great buy if we caught it when it broke through that area of resistance. Now let's look at it on the 4-hour time chart and see if there is another area of resistance that showed up. No, there's no area of resistance. Right now it's showing that it's in a downtrend on the 4-hour time frame. Looks like it's going to be coming back down to the 50 line on our RSI. So this stock right now, as a beginner trader, and I'm talking about it from a beginner's perspective, somebody who took my course, never really had that much training as far as trading, or somebody who's self-taught, uh, who don't know how to look at the charts and kind of really see true areas of opportunity. I'm looking at it from that point of view and saying, from the most simplest basic setup that you can have, I would avoid trading this stock right now, all right? Because there's no clear um, entry point, stop loss point, and take profit point. Next, we're going to go to IONQ. IONQ, I believe I already have that on my watch list. Yes, oh, no, I don't. Oh, wow. IONQ, I thought I would. All right, let's pull that up. IONQ. Let's pull that up and let's take a look here. All right, so this stock over here, it was in an uptrend. It was in a clear uptrend, and red lines on top, red lines at the bottom pointing up, green lines on top pointing up. But the problem that we have here is that we have this little curvature right here. This little curvature in the green lines, kind of a little bit of an indicator that, look, these two lines are going to start meeting and coming closer together. Like, as you can see here, when they were far apart when we were in a downtrend, red lines on top, green lines at the bottom, they were very far apart. But then as time went by, they started getting closer together, and that was the indication that, and that was that curve right over here. And that's that indication that we may be having a crossover and changing from a downtrend to an uptrend. So here, when I see this curvature, it's letting me know that, hey, there's a possibility we may be crossing over again and going from an uptrend to a downtrend, especially now that it's right on that 50 mark on the RSI right over here. It's on the 50. So we're going to see if it breaks through it and it starts staying below the 50, between the 30 and the 50. That means that's a first clear indicator that we're in a clear downtrend. So that's why this stock right here is not on my watch list as right now. All right. So you see how we're able to just pull up a stock with the indicators that we have, that I show you how to set them up on when you take the course on Udemy. Now you're able to see how you can clearly just identify, okay, possible to buy. Should I do more research, or should I just skip it and go to the next one? Next, we're going to go over to number 23. Number 23 is an ETF. We're going to stay away from that. Number 24, healthcare. We're going to stay away from that. Number 25, that's insurance. Okay, property and insurance. Do I want to deal with that type of stuff right now? Not necessarily right now. And the reason why I wouldn't do that with property or property and casualty insurance is because we're going to be going into hurricane season right now. It's the summertime, right? We're going to be going into hurricane season pretty soon. But let's take a look at it. SLDE. Let's take a look at it. I've never traded this stock before. SLDE. But typically, I wouldn't look at an insurance, because I'll have to get more into detail and say, okay, what's going on with this particular stock? And look, this stock was just listed on the stock market on June 18th, so there's not enough information, so we're not even going to bother trading that one anyway. So number 26. Number 26 is a healthcare stock. We're going to stay away from that. Number 27, that's a solar company. And here, where you have to be up to date on what's happening in the news. With this particular solar company, we're going to stay away from that. The reason we're going to stay away from this particular company, is because Donald Trump is really against clean energy. He's more into coal, Oil, drill, baby, drill, and nuclear power plants. So these stocks right here will not be good stocks to buy right now because most major investors are probably going to stay away from them. But just to kind of show you what's happening here, and this is just me saying this off the top of my head. Let's take a look at it. I haven't looked at the stock yet, but just knowing that it's a solar and knowing what's happening in the news, I'll stay away from it. ENPH. Let's go. ENPH. ENPH. Let's take a look here. Solar, and we're going to pull that up and look at this. This stock is in a clear downtrend. Red lines on top, pointing down, green lines at the bottom of it, and it's pointing down. And here we are. It's just dropping, 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 and it's going to continue dropping because most investors know. And look at these big gaps between the job. Like it's closed off here at $46, and then the next day it just opens up at like $37. That's a $10 drop. And it's constantly having these drops. Even when it pulls back, it does a, you know, it goes up a little bit, it just drops again. So we're just going to stay away from those in general. And this is why I say you have to be able to look at the analytical, the technical analysis, and you also have to be able to look at the fundamental analysis. Because if you're just looking at the charts themselves and you're not looking at what's happening in the news, or you don't know what's going on in the news, you'll never really be a successful trader. You cannot simply trade solely off what's happening in the charts. Okay. Anybody that tells you that is misleading you and giving you the wrong information. All right, number 28, that is a ETF. Number 29 is an ETF. Number 30, healthcare. We're going to stay away from that. Number 31 is healthcare. We're going to stay away from that. Number 32, insurance. We're going to stay away from those as a whole. Like I said, we're going to stay away from insurance as well. All right. Number 33 is healthcare. We're going to stay away from that. Number 34 and 35 are ETF. We're going to stay away from those. And I'm talking about it from the point of view of a beginner trader, somebody who's absolutely new to trading, or somebody who's self-taught, who doesn't really know what an ETF is, how that works. That's why I'm saying stay away from those. And once again, I'm saying stay away from the healthcare stocks because healthcare stocks are extremely volatile, especially with the person we have in charge right now of our healthcare system here in the US. They're against anything that deals with vaccine. They don't even want you taking medicine, seem like. So stay away from those because those stocks are going to be extremely volatile. You can buy a stock and it shows that it's going to be going really good. And then next thing you know, they say, hey, we're not going to be recommending these drugs, this drug, and certain drugs may get recalled or pulled off the market. So stay away from those right now. So now we're down to number 36. Number 36, GRR. I have that on my watch list for sure. And yes, I am in that trade right now. That's why I have it green, because that means I'm in the trade for that stock. All right, so let's see how that's working out for me. So right now I bought this stock, right? I bought this stock, and when I bought the stock, it was here. I bought the stock 2 days ago. Yeah, yesterday, not yesterday. Yeah, I bought the stock on Tuesday, and the stock was above this area of resistance, right? It was above this area of resistance. That's why I drew that blue line there. And then today it opened up higher up here, and it opened up higher at about 42 because I bought it at roughly about, I bought it at 21, I believe. I bought it at 21, 25. It went as high as 22. Well, it went as high as 23 to 50 when this morning, but then it came back down and it closed right here about $20.65. But the reason why I feel very comfortable with it and I did not cash this one out is because, one, we can see that the stock is in an uptrend. It just did a crossover, green lines on top and it's pointing up, red lines at the bottom and it's starting to point up. So once it breaks through this, clearly breaks through this area of resistance again, it's going to continue going up. Now, one of the reasons why it did start to drop back here after it broke through it is because of the situation in the Middle East. And what is this? This is a technology software company, right? So they also benefit, depends on what type of software they make. They can also benefit from, missile components or different types of software. We'll have to dig into that. Now, when I trade these stocks, I'm trading off of two things. I'm trading off of the charts, and I'm also trading to see if there's any major news that's happening here. And one of the things I would tell you is, especially, and this is why I recommend these particular softwares like investing.com, FinViz as well as TradingView is because you have these little indicators right here. For those of you who've never used TradingView, you can actually click on that and it lets you know of any news or anything that's coming out, right? So here we go. Yesterday they announced that they're going to be acquiring another firm, right? Thai Tech. And over here, the group yeah, they acquired it, and it's going to become a subsidiary of theirs. So here we can see information that's coming out about the stock. So I feel very confident. I bought the stock, and right here, if you buy the stock at $20.65, I'm pretty sure tomorrow during pre-market, by the time it opens up at 9:30, I think the stock is going to be above this area, above 21. But if you were to buy the stock, I would say set the stop loss at about $18.16. So if it drops below $18.16, then I would say, hey, get out of that trade, right? But for right now, I feel very comfortable saying, okay, if you bought it here, it's gonna break through, and I would say take your profit if you can around $24. That's why I have my alert set up at 24.61. Now, this particular trade, I may not be out of it by the end of the week. I may be out of it tomorrow. I may be out of it on Friday, but it all depends on where the price is, and this is why tomorrow we'll come back and we'll take a look at it. And it all depends on where the price is. I might cash out on Thursday, or I might cash out on Friday. I don't like to be into these trades on over the weekend, especially with what's happening with today's administration. Okay. So the next one that we're going to look at is going to be CMCI. CMCI, I believe that one I'm also in a trade for that one as well. CMCI. Nope, I'm not in the trade for that one, but I do have it on my watch list. Okay, so CMCI, right over here, I have it on my watch list because the price point is here. This is an area of resistance right up here. I'm waiting for it to break through this area of resistance. It did test that area of resistance here, and I feel like once it breaks through it, then I would buy it, and I set my stop loss right underneath here. So right here, we can see that the green line's on top. It's pointing up, and the reason why I still have it on my watch list and I don't have it orange yet is because it did have a little bit of curvature, and I was concerned that it may start to change and cross over into a downward trend. But here we can see that we have a big, strong candlestick, and therefore it's back into the uptrend, and the green line starting to point back up again. And here we can see on our RSI, it did hit that 50 mark with this red candle. It did go down and hit that 50 mark right over here, but now it bounced back off to 50, and it's pointing back up. So very confident that maybe tomorrow I'll be able to jump into this trade. Okay, so we're going to put a yellow next to that, so we know that more than likely this is a trade that we're going to be able to jump into tomorrow. All right. And next one is going to be Newsmax. Newsmax, I'm not even going to bother looking at Newsmax because it's broadcasting and there's not enough history. Newsmax was just listed in April on the stock market, so it doesn't even have that much history as well. So that's why I'm not going to bother looking into Newsmax. Number 39 is an ETF. We're not going to look at that one. And then number 40 is MNTN. What is that? MNTN. And let's take a look at what that stock is. That stock is, once again, a stock that we're not going to touch because it's never really been in this area. It's always been $12 or lower. And for whatever reason, it broke through and it went up. And so this stock, I'm not even going to bother looking at it to trade it. Okay. Just by looking at it, we can tell like, hey, there's not enough history and not information. This stock, if it looked anything like this, which is here where we have a lot of information, there's a consistency, then I would love bother trading it. All right. So it's basically, we started our course at 7:30. All right. It's 8:29, which is roughly about an hour. And this is with me talking. We were able to go through our economic calendar, verify, see what news or reports the government's going to be releasing for tomorrow. We were able to come over here to FinViz, which is our stock screener. We were able to filter through and go and pull up our stocks. We saw that we had 64 stocks available from the original 10,100 stocks that are available in the stock market. And so far, we've already gone through 40 of them. And that's with me explaining to you, every single thing. Now, if I was not explaining to you guys, what I'm going to trade and why I'm not trading it and everything else like that, we could have been done with this in about 30 minutes or less, right? So we're going to see if we can finish the other ones up, because I think I can do the stream live for about 2 hours. So I'm going to try to get this done as quickly as possible, right? I'm not going to talk as much. So here we have MP. MP, let's pull that up. MP is going to be here, materialists. And are we going to be trading this particular stock? Let's see what happens when it loads up. Here we are in a clear uptrend. Green lines on top, red lines at the bottom, pointing up. We can see that over here, the price is pretty high. We're going to wait for it to come down to the 50. And when it comes down to the 50, we're going to see how close it can come back down to $29. If we were to buy it here at this price, we can roughly buy about 12 stocks, 12 to 11 stocks. But if we bought it at this price, then we would have to set our stop loss down here at $29, meaning we would be willing to risk $6 for every stock that we buy. If you take that 6 and you multiply that by 12, that's roughly what, $72 that you're putting at risk, right? But we know that the stock can more than likely come down just a little bit more before we buy it, right? So let's take a look and see if that's possible. Let's look at the 4-hour time frame. On the 4-hour time frame, nope, I don't think it's going to come down any lower. I think that this is it. I think this was the new low, and that's it. So I'm going to buy it here at this price, and I'm going to set my stop loss over here at about 32.82, right? So I'm going to add this one to my stop. I do actually have it on my watch list. So we're going to have it on my watch list, and I'm going to put a stop loss here if I buy it. If I buy this stock here. So we're also going to add this one to my orange, meaning this is a stock that I can buy first thing in the morning. And if I bought it at this price or lower, if it comes down to here, that's fine. And I'm talking about as a little bit more of an advanced trader. I'm not talking about as a straight beginner trader. As a straight beginner trader, I will tell you, you're always looking to buy it right when it crosses over, when it closes above the area of resistance. And then you buy it and try to ride the waves up. But me, because I know I know people with a little bit more experience are watching the course. So I'm just saying to them, I would recommend that if I'm going to, I know that I'm going to buy the stock here. I'm going to set my stop loss right around here and probably let the wave ride up a little bit, because this looked like it's going to be a new low. So stock went up here, it came back down. This was a low, stock went up, and then it came back down. This looked like it's going to be a new low, but it all depends on what happens tomorrow. All right. So I may end up trading this particular stock, right? So let's go to the next one, which is going to be healthcare. Number 42 is a healthcare. Number 43 is a healthcare stock. Number 44 is an ETF. We're not going to trade that. Advanced Auto Parts. Advanced Auto Parts, I am not going to trade that stock. Advanced Auto Parts, there's a lot of things that's been happening with it. And like I said, I like to stay away from stocks that are really like household names. The reason for that is because anything that happens in the news or somebody talks about those, because those are household name brands, it really affects the stock. So these stocks really, they do trade off of off the charts, but a lot of people also trade a lot of people trade these stocks off the news and what's happening off the fundamental piece of it, because this is a well-known American household name brand, and some bad news come out is really going to affect the stock. Next one is 46 is an ETF. We're not going to touch that. Number 47 is a healthcare stock. We're not going to touch that. And number 48 is going to be SYM. 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 What is that stock right there? Let's take a look. Oh, this is looking pretty okay. Well, no, this one looks pretty good. It's an uptrend, broke through it. Boom, boom, boom. Then it broke through it here, and that's on a 4-hour time frame. Let's look on a daily time frame. Wow, this is a strong stock. It's going up. It hits a new low. You could buy this if you were a seasoned trader, but once again, I'm looking at it from the point of view of a brand new trader. We do have an area of resistance over here. It looked like it just broke through it. But if I was to buy this stock over here, there's no clear stop loss where I can say, okay, if the stock was to pull back, how low could it go? you're putting a little bit too much more at risk. So this was a low, looks like it, but I'm not going to do that because we want stocks that we can clearly identify, something like this. This is an area of resistance. It broke through the area of resistance. We buy it once it closes above the area of resistance, and then we just ride the waves up, right? That's what we want to do. This one's already in a clear uptrend, no clear area of resistance, no clear stop loss, take profit on this one, so I'm not even going to bother trading that one. Next, we have number 49. Number 49, SN. Let's take a look. What's that? SNDK. SNDK. We got this one here, which is okay. I think I had this. Did I have this one on my watch list? No, I did not. All right. SNDK. We're not looking at trading that one. No, SNDK is too sporadic and not enough history here as well. So we're not going to bother trading that one. And then afterwards, number 50 is an ETF, TSSI, number 51. TSSI. Right, TSSI is going to be, once again, it's already in a clear uptrend. No clear areas of support and resistance. No clear entry point, stop loss point, take profit point. We're just going to go ahead and skip it. It is, and we're looking at it, like I said, purely from the point of view of a brand new trader. Okay, AEVA. Okay, let's pull that up. What stock is that? On a daily time frame, once again, we can clearly see that the stock is in an uptrend, but no clear entry point, exit point, and this stock is just now hitting this area in March. Before then, it was $5 or less. I'm going to completely avoid that stock. No clear history there. All right, number 50. That was number 52. Solar, which is number 53. Once again, we're going to stay away from solar because we know that the administration is not into it. Number 54, healthcare. We're going to stay away from that. Number 55, oil and gas. Number 55, WFRD. Let's take a look at that one. WFRD. All right. And what is that one? Let's take a look on our daily time chart. This one is, oh, wow, we may have a good opportunity here. All right. I did not see that one coming. All right. This is oil field. This is equipment. All right. So let's see what happens here. All right. So we're looking at it on our daily time frame. Right here on our daily time frame, we can clearly identify an area of resistance right here. And we can clearly identify an area of support right here. What we're going to do is we're going to set an alert right about here. Matter of fact, let's set the alert right here at the bottom at that price. And the reason why we set our alert right over here, and that's why you see this little yellow line just popped up over here at $50.81, right below it, right below that red line, is we can see that we just came out of what they call the dead cross. Red lines on top, green lines at the bottom, red lines pointing down, green lines pointing down, meaning we're in a downtrend. We just had a crossover, which is the green lines on top, red lines at the bottom. The green line is somewhat pointing up. The red line was going sideways, and now is starting to point up, right? So once we have a clear indication where the green line's pointing straight up, pointing up, and the red line's at the bottom and is pointing up, we know that we're going to be in a clear uptrend. So here's an opportunity for us to catch this stock right when it breaks through, right? That's why I set my alert here. So when it gets in this area right here, I'm going to keep an eye on it, wait for it to close above it, and then buy that stock and just ride the wave up, right? And that's what we're expecting. Right here on our RSI, we can see that it's below the 50 and it hit the 50 again, then it went back down. So what we're looking to see that it breaks above the 50, and this happens like this, where it's above on top of the 50, it goes up to the 90. I'm sorry, it goes high as the 70 and kind of stays in that area, right? Or up to the 100. So we're going to keep an eye on this one because this may be an opportunity for us to catch it right when it breaks through. So we're going to add this one over to our watch list. And we're going to go over here and add it to the watch list. Next one is going to be AAOI. AAOI. Let's see what this one is. Mhm, mhm. All right. So oh, another really good opportunity right over here. Okay, look at this. Um, oh man. But you know what sucks? Okay, yeah, this one, yeah, but see, this stock only moves up $2.12 on average a day, but it just broke through that area um of resistance, right? And it came back down, but it didn't break through it, right? It just broke through it, tested it, and went back up. Can't believe I really missed this one too. Just because I never really got this far with this one. So we're gonna add this one over here to our watch list. And let's click on that, add it to our watch list. And the idea is that we want to buy this tomorrow. And if I bought it tomorrow at $26, I have to set my stop loss right underneath here, around $20, and be willing to lose about $6 for each stock that I buy. So I'm hoping that it comes down just a little bit, so I don't have to have that big of a gap between my entry point and my stop loss point. All right, every dollar, every cent helps. But this one is going to be a stock where I'm going to probably say is going to be a yellow, where we can probably just let's do a blue. Let's make it blue. And the reason why we're going to make that one blue is because we're going to say this is a stock that we're ready to buy first thing in the morning. All right. So that's a really good one right here. And I mean, if you look at our RSI, it's already in the upward trend. Let's see any news coming out about this one. Da-da-da-da. Ooh, okay. So good information is coming out about it. And here it's strong buy. It's a buy. And look, 1 year price point, $29, and they expect to go 29, but it'll probably go a lot higher because it's been in this area before. There's no clear area of oh, look at this. There's no clear area of resistance all the way up until $40. This is going to be a really, really good buy right here. Okay. And it's really cheap, so you can get a lot more bang for your buck if you have a $3 or $500 account. So that's a stock that we're really going to keep an eye on. And now we have next one's Papa John's. Going to stay away from Papa John's. Don't care for it. And then we have SMTC. Oh, what is it? SMTC. 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 I'm trying to wrap this up really quick before my time is up. SMTC. And this one, but we're gonna try to do this on a regular where we go through all of the different stocks so people can, you have a lot more options of different, then you select which stocks you want to buy. Over here, SMT. Oh, wow, look at this one. This one's another really good one right over here on the daily time chart. Okay, great, great. I'm glad I did this today with you guys because I normally do a lot of this stuff early in the morning. All right, so we're going to buy this stock. I'm going to add this one over here to our watch list, and we're going to buy this one tomorrow. Okay. Uh, the reason why I say that is because we're in the uptrend. Green lines on top, it's pointing up. Red lines at the bottom, it's pointing up. On our RSI, it's above the 50. And here we just broke through an area of resistance. So it depends on how it looks tomorrow. This may be a stock that we actually purchase first thing tomorrow. So we're going to make this one blue as well. All right, so this may be a stock that we purchase first thing tomorrow, depending on where the market closes. All right, so this is a really good one right here as well. And we can buy this and ride the waves up all the way up to maybe about $61. Really, really good buy. So this may be one of those stocks that we do a long-term hold on. And but also one of the things that you want to be considerate of is you don't want to buy too many stocks in the same sector. Right? It's like you might as well just buy an ETF, right? But you just don't want to buy too many stocks in the exact same sector, which is like electric technology or anything like that. The next one that we're going to look at is going to be an oil stock. This is in Mexico. I'm not going to trade this stock because it's a company that's based out of Mexico. It's a Mexican stock. It's a Mexican company. Not that I have anything against Mexico, but I prefer to trade only stocks that are based out of the US, UK, or certain other countries, right? GTLB, I already have that on my watch list. GTLB, yeah, this stock right here, I'm actually going to take this off my watch list because this stock, we will keep an eye on it, and it looks like it's in a clear downward trend right now when you look at it on the daily chart. And you know, it's not something that we're going to bother taking a look at, so I'm going to take that off. I was hoping it was right here. It had a crossover, but it didn't. It didn't go the way I expected it to go. It did come down to here, it bounced back up, but it looks like it's going to continue going down. So we're just going to take it off. And then over here we have a technology stocks, which is QUBT, QUBT, QUBT. Let's take a look at this one. QUBT, computer quantums. We're going to go with that one. And this particular stock, there is no clear buy-in area. So we're just going to avoid this one right over here. If it was just breaking above one of these, then that would have been fine. It is in an uptrend, but not even on the forward chart, we can see a clear area of resistance. What it's just breaking through, and it's going to be going back up. Look like we're going to be in the downtrend on this one. And then we have over here, we have Rocket Lab, which is aerospace defense. Let's take a look at that one. Number 63, RKLB. RKLB. Let's take a look here. RKLB. RKLB. That's going to be okay. Just okay. So we got to see here with everything that's happening. Yeah. Here's the thing. Yeah, I'm gonna stay away from those two because morally, I kind of like I would not necessarily want to profit off of wars. So I'm just going to stay away from the aerospace and defense because these companies may specialize in making missiles or whatever the case may be. So I'm just going to stay away from these last two right over here. So as you can see with this live, we just went through 64 different stocks. We went through those stocks that we had filtered, and we were able to pick at least 6 stocks that we can possibly look at and trade for tomorrow. And this is where we got our chance to look at our watch list. So we added some really good stocks to our watch list, and we have 2 buy first thing in the morning, depending on what happened during the pre-market trade, which are these 2 right over here. So if you're a brand new trader and you're starting off with about $300 to $500 account, you may be able to buy just spend the $500, only buy one of the stocks, or you may be able to go ahead and buy 2 stocks and split your $500 or $300 and buy the 2 different stocks. But we have a good list of stocks here on our watch list, and we clearly identified our entry point, stop loss point, as well as our take profit points, right? But these 2 right here with the blue, I actually really like this one. AAOL, I actually really, really like that one because of the price point, and it has a really good ATR, which I believe is about, let's take a look here with this particular stock, the ATR. So the stock moves up or down on average about $2.12 a day. So we can get a pretty good return on it. Okay. So that's it for today. This one was a little bit longer of a live, but we covered a lot. And if anybody is tuning in right now, at this point or halfway through this, then I would recommend that you kind of go back and watch from the beginning so you can see all of the different stocks that we picked, because we did go through FinViz and we went through our stock screener and we went through all 64 of these stocks, and we found some really good picks. All right, guys, have a wonderful day. Thanks you guys for tuning in. I will see you again tomorrow, same time, same place. Please subscribe to the channel if you haven't. Recommend it to a friend if you have not taken the course on Udemy, and you get a little bit